The market today was absolutely wild. NVIDIA could not quite crack the 195 mark, and we saw the sell that resulted from it. And well, we have to talk about the catalyst that we have going forward from here and what exactly to look for and expect, and talk about what exactly is going on with the market. So we're going to take a look at SPY, QQQ. We'll also take a look at IWM, and then we'll also take a look at BTC's chart and NVIDIA. And I wanted to talk a little bit about some bargain bin prices where we can potentially see a bit of a bottoming over the next several weeks that play out from here. So I'm going to toss the charts up here because the Q is probably, in my opinion, one of the most interesting, because this thing was up over 2% at one point in time early on in the market, and then it dropped all the way down, 4.77% swing from peak all the way down to trough during the regular trading hours. Absolutely insane volatility. 5% down in a week is big. 5% change in a day is just, it's crazy. It's enormous. It's even worse than what we saw back over here on Friday, the 10th of October. So let's talk about moving averages for a moment, and then we'll talk about what else we can see from here. So moving averages are going to be important to us for a couple reasons. One, when we look at the Qs, we already have the 5 down over the 50. And I said in my morning video, I'm like, please don't let that cross be meaningful. That bearish crossover of having a faster moving average moving down over a slower one. One of the more impactful things that you want to pay attention to, if I take down the candles here, you'll be able to see it. This yellow 13, that crossing down over the 50 is a further bearish sign, a much bigger bearish sign than something like the 5, which is a very fast moving average, to something that's still a fast moving average. That crossing down over the 50 is usually a sign of further bearishness to come our way. So I talked in this morning's video about how important it was that we were able to stay up above that 13 and up above the 50, and we were able to do neither of those things. And you can see the sort of sell that we got on this thing. So where are we looking? If this thing does continue to sell, that 200-day is where I'm looking to see that major sign of a bounce. If we sell down that far, there are some other supports along the way. We are darn near it right now, even though the post market 584 is what it says. 584 is up here, and at one point in time is riding right along this pivot line that we see at 583.32. And if I drop down the 5-minute chart, you can absolutely see that during those after hours. You can see where we actually did find that support, just floating just a little bit north of it so far. Watching that candle grow, holy cow, that was wild to see with these different market developments that we have over time. So going back out to the daily chart, and we'll take a look at the supports and resistances. We have a lot of support all the way down to about 576, 577 is what it rounds up to. If we lose that, which goes along with this shelf that we have over here, that 200-day is also supported underneath that by about 551, 547, then majorly at this 539 level. So if we happen to lose this support, watch for that 200-day support. If we go out to a weekly chart, there we go. The 50-week would be then what we were looking for that coincidence as well, which also happens to be right in there. And then if we also look a little bit to the left, you can see back in here with those peaks that we had in 24. And in terms of the crossovers, the bearish crossovers of the moving averages, we've been riding on top of the 5 for a while, signs of bullishness, and then we lost riding on top of it. You can see over here that little bit of a change, but we got those low bottom wicks, which can be bullish for us. But along with the bearish divergence that we were seeing with the RSI, just a little bit of signs of it selling off a little bit today. Now, mind you, tomorrow could be a bounce after such a roasting in the markets, if you will. So short term, we could recover from that. We're still in overall bullish territory, but with some signs of some near-term concerns. And I'll talk about in a moment, once I'm done getting through the Qs here and the SPY and IWM, we'll talk a little bit more about what I think is going on with the markets and what I think the market's going to do and why I think that they could soften a little bit more for us before we start to see that rally. We start to see this gooseneck is what I call it. I don't know if anybody else does, but we have that long neck of the goose or whatever coming up this way, that head formation here. We want to watch for that cross of that 5 down over the 13. If you see that, that's an initial sign of some short-term weakness that can push us down to the 50 EMA, like on the weekly chart that you see here. If we go back out to the daily, we already have the 5 down over the 50. It's that 13 over the 50, which could push us down to the 200. And what the heck, let's talk about it now. So we have the Fed meeting coming up on, I believe, December the 10th is the conclusion of that meeting when we get that Fed interest rate decision. And I think one of the things going on right now with the markets, besides some de-risking that we have going on, I think that the markets really do want the Fed to make that cut, and that they want that sweet, sweet liquidity be poured onto the market. And so really, if we want to see the market start to rally into the end of the year, well, then we got to find a near-term bottom for where that's going to be. And engulfing candles like we got today can be signs of further bearishness to come, even if we do get some short-term rallies. So we find out where the floor is. The next thing you have to do is, okay, well, where's the ceiling? And we want to look for that rejection to the top side. If we break those near-term ceilings, then they turn into near-term supports. However, if we rejected off those ceilings, well, then we got to look out below for that next test of the floor. Is the floor still where we left it, or did the floor continue to drop from there? And then you can watch that stair-stepping movement, if you will, especially on the nearer-term charts, like a minute chart or something like that. You can really see that take place over time. That it's usually not just a straight sell over time. You get, a little bit of drop, and the same thing when you're rising back up. That it's ceiling, floor, ceiling, floor, ceiling, floor, and it just keeps on testing. Is the ceiling where we left it? Is the floor where we left it? And that's really where your supports and your resistances come from. So putting this, so the Fed meeting's one thing. I'm sorry, I'm very interested in the charts, but let me finish talking about the Fed. So Fed interest rate decisions, one thing. We want to see that rate cut happening. The CME Fed Watch tool, and that changes all the time, but the last time I looked at it, which was a few moments ago, said 39% chance of a rate cut coming up, 25 basis point rate cut coming up on December the 10th. 60% chance that we stay right where we're at. And the market doesn't want to stay where it's at. So non-farm payrolls was very good, that we see that sign of strength for the labor market. Unemployment rate at 4.4, I said that could be okay. And at least initially, the market thought that it was okay. And I think the bigger thing is the easy monetary policy that the market really wants to have happen. And I think that the market is going to try to force the hands of the Fed into that situation and give them as little reason as possible to keep the rates exactly where they are. I think that they're going to instead, the market could actually try to get the Fed to be like, ooh, things are tanking right now. That's not doing so great. And maybe even getting Donald Trump involved in talking those markets back up again, because we know that his words definitely do impact the markets. And I'm not here to be political or partisan, but that is something that definitely does happen. Just look back to April of 2025 with the whole tariff situation, when the market got brought down to its knees in a very short order, and then also popped up to the recent all-time highs that we saw. So the market could be moving itself into that sort of situation, taking some profit, de-risking along the way, and really hoping to get that liquidity to really return to the markets. And so with that commentary in mind, let's go out to the SPY and give some quick commentary on that. Looking at just the moving averages for the SPY, there we go. Once again, you have the 5 crossing down over the 50, potentially the 13 also crossing down over the 50. Putting the candles back up for that. Boom, there we go. So we can see them. You can see that we couldn't hold the 5 or the 13 or the 50 sold down below them. Hitting our heads on those moving averages is huge. If we get that 13 crossing down to the 50, we could watch that 624 come out here. So IWM, there we go. The small caps, what the heck happened? Well, there's that just massive red candle that we got. Couldn't break up over the 50 EMA, couldn't hold the 5 or the 13 either, sold down. It is near, there's a very important value of 225 for IWM, for those Russell 2000 small caps. So if we hit that 225, I would expect at least an intraday bounce to come from that, and that coincides pretty much with that 200 EMA as well. So we got big volume on a big move down. Like I said, after such a strong move down, you could get a bit of a bounce happening the next day. But this is a situation, it feels just a little different under our current circumstances, where we can see a little bit more softness. And if I put those rays back up on here, I'm not sure what all technicals I have. There we are. That support, look at that coincidence that we have again, the coinciding of the 200 and also what we have here for this red support line that we have, this trend line, which is part of just a massive bull channel that we have over time for the Russell 2000 stocks. You can see that goes on from 2009 to present, and the red is sort of the danger zone, or that sell zone. If you think about that up here is where those sells come in, and then down here is where those buys come in. So it goes above red to die, goes above down below green to come to life. And so we want to watch and see what we get that from even a monthly standpoint. Does it come down and reach that 13 month, which happens to be at 222.69, which is near that 225 number. And the softer this gets, now mind you, bargain bin prices, 200 would be such a round and sweet number for this to hit. It'd be painful on the way down, but I think it would set that massive opportunity on the way back up. For Bitcoin, Bitcoin, I have some bargain bin prices on here. Things that I'm looking for Bitcoin. If it does sell, I would absolutely love to see 74 happen here, taking us down to this previous high that we had. Even better, anything at or below this, about 64,000, which is this 50-month EMA. And if we go back to the weekly chart here, just north of that is that 200-week EMA. That happens to be about 66,000. That goes along with this area that we have over here before the last time that we made that massive run. Now, something else I want to show you on the weekly chart, this not inverse head and shoulders, that's another thing, but this cup and handle pattern that you sort of see here. So there's the cup, there's the handle, there's the breakout. We pretty much filled that out and then got a few thousand extra on top of it, and then it kind of softened from there. So I'm looking for these bargain bin prices. My dad has been on me about getting more into crypto. And I said, I think that we're going to have some softer times coming when we're up here north of 100,000 per BTC. And I said, well, with the money that I handle for him, I said, why don't we just, be a little bit patient here. I said, I think that really could pay off for us. And here we sit at 87,000. And, I think that dollar cost averaging might be that thing that I might have to bring in, because who knows if we get these bargain bin prices. I do think if we get these bargain bin prices that we very much increase our potential over the next 12 months to hit that 150,000 per BTC that I was predicting for the end of 2025. That was my price target for it. And right now it's looking a little bit risky to get there. But I still think over the next 12 months, certainly we could definitely make it up to that 150,000, but it does depend a lot on the environment that we find ourselves in, and it requires further analysis as we have those developments coming in. One final thing that I want to show you while I have the Bitcoin chart up here, these support and resistance rays, and I know it looks a little bit busy here. We'll go back to the monthly chart, and we'll take down these price notes so you can really see what's taking place on this. There we go. We'll hide that. There we go. So these all connect back to November of 2013 is the month candle that we're looking at. As this is the monthly chart here, BTC versus the US dollar, 1 month per candle. So when we look at that November of 2013, these rays that get drawn from that central location to the different pivots and peaks that we have over the time. So the peaks, the troughs on this, man, this thing just keeps on going. This top ray, by the way, was drawn July 25, and it predicted the next 2 peaks that we had there. And then if you look at the sell that we had over time, look at the way that we stair-stepped down this thing, that we couldn't sit on top of this ray, sold, couldn't sit on top of that ray, sold. And then just look at the resistance and when we got down beneath it. And then this final rejection that we had, couldn't break above that ceiling, came down, broke through the floor, retested, got rejected at the ceiling again, sold down. So for anybody who does a lot of technical analysis and watches the support and resistance, this is a very clean, just single predictor based on those rays that you saw that were drawn on here. And I essentially told you how to do it. Go back to November 2013, that monthly candle, and then just trace out some rays to the nearest peaks that you can find. And what you see is that they do a lot to explain the price movement that we had that we have on the way up and on the way down. Even when you go back here, you can see just how well the rays work at showing the support, and then breaking through that, we were able to go up, and then it got rejected there, back down to the floor, and then back up again. So, these rays, yeah, you can call them trend lines, but the thing is that they just keep on working in such a clean and concise way for just a single view of Bitcoin. I really do, and I appreciate them and I enjoy them. NVIDIA from its monthly chart, some more bargain bin prices, 137 to 153. Now, mind you, below these prices, of course, would be just such deep value, especially when you start to get in these low bottom wicks down below $100. And people hear that and like, you're going to say NVIDIA is crashing. No, I think it is de-risking a little bit, though. I think we're giving a little bit back. So far on the monthly chart, we're getting an engulfing candle. We might bounce. We're at the 5-month EMA right now. If I take all these technicals down, you can see that. There we go. Right now, we're at that 5-month. If we lose that 13, I think, which is right around that mid 150s, mid to low 150s, it's at 155 at the moment. That coincides with these peaks, and we could see that happen. And I think that we would have a significant bounce come from it. And I would love that sort of price coming out on NVIDIA. I think that this 20-month moving average, this is a simple moving average, this blue line. Let me take down the EMAs for a moment so we can focus right here on this blue line. This is the 20-month, a mean reversion like we got going all the way back to April when I said 2-digit NVIDIA would not last long, and it didn't. This thing went all the way down to $86 per share and then blew up beyond that well over $200 per share. So we got we doubled and then went another my goodness, another 50% on top of that plus. So as a matter of fact here, I'll tell you just how high that climb was. Perfect. 145% is what we got. So doubling and then 45% more stacked on top of it for that move. So if we make it back down to that 20, it really does line up with these previous peaks that we have back here throughout early 2025 and the end of 2024. And I think that not only that support that we'd have, plus that mean reversion back down to this 20 simple moving average, I think would be absolutely enormous and wonderful. And it's at about $138 per share. So these are not predictions when I talk about these bargain bin prices. Instead, what I'm talking about is the areas that I would hope to see things from an investment standpoint, not a trading standpoint. In other words, to buy Bitcoin at what I think would be a very, very cheap price. Same thing for NVIDIA, seeing it down around $138 per share, I think would be very, very cheap for them, especially given the growth that they're expected to do over time. And especially as we start to hit deeper liquidity for the markets, that we start to see that return and we start to see the buyers jump back into it. I think we had a lot of stop losses trigger and a lot of selling today. So kind of surprised people and people panic sold. Like I said, stop losses also going along the way. I think that had a lot to do with it. So that's my commentary that I have for the markets, and you guys can let me know what you think about it. I think the jobs reports, by the way, we get the next, I think it's the JOLTS report we get on December the 9th, which is while the Fed is meeting before their interest rate decision on the 10th, by the way. And then December 16th is when we get the next non-farm payroll and unemployment rate, and that'll be a combined October and November data. It would be all lumped together. They announced it as such, and if you look at the recent non-farm payrolls and unemployment from this morning, it says it right in the report that it will be December the 16th at 8:30 a.m. So you want to mark that on the calendar. It's normally the first Friday of the month, but given the government shutdown, that's not the time. Those labor market reports are going to be massively impactful to what we see, especially the JOLTS, because the last one that we get prior to the Fed meeting, or I should say prior to the Fed's interest rate decision, it's while they're meeting coming up here in December. And we absolutely, news of that rate cut is going to be bullish for the markets, and news against that rate cut, in other words, the Fed holding up their interest rate where they have it, the federal funds rate, keeping that elevated is going to be probably a little bit worse for the markets. But definitely keep paying attention to the labor market, keep paying attention to the charts, keep coming back to this channel, guys. Otherwise, I'll see you over in the Discord. Links down in the description. If you want to check out that coursework for Stockmo Academy, as I've partnered up with him to help you in your journey towards financial freedom and building alpha in your portfolio, those courses are certainly a wonderful investment. Code word doctor is going to save you $400 cash when you sign up for those courses. And if you bundle the two courses together, it will also offer a bundle discount as well, even deepening the value beyond that. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.